Welcome to this lecture on the UK tax implications of buying and selling Bitcoin or any other cryptocurrency. My name's Dean Wootten. So what is Bitcoin? Well, Bitcoin is electronic money, a cryptocurrency. There are many cryptocurrencies around. Bitcoin seems to be the most high profile. Effectively, it's peer-to-peer lending, really. It's a peer-to-peer online cash system. It is not centralised, it is not state-backed, it is fair to say that it is high risk. All transactions are recorded on a blockchain, and you get access to your Bitcoin via a cryptographic key, which is kept in an online wallet. So Bitcoin is effectively on your laptop, and you access it by a cryptographic key. It's fair to say it's best to keep this offline. Because Bitcoin, if it's hacked, it just goes. It's gone. If you lose your laptop, it's gone. So we've got to keep it secure. And what many people have done is they have bought safes or similar, and they've actually locked their laptops in their safe. Because if they're sitting on a lot of Bitcoin, then that is an enormous amount of money. And it's all on your laptop. You don't want to lose your laptop. You don't want to get your laptop hacked. So therefore you've got to keep it secure. Bitcoin values, well, they're currently about £185 billion worldwide. Around about 20 million Bitcoin owners. The value of one Bitcoin at the time of writing this article was £7,941, but is extremely volatile. At the time of recording the lecture, which is a week or so after writing the article, Bitcoin is now worth £6,118. And I bet if you check again when you're listening to this lecture, it'll be very, very different. So it's very up and down, Bitcoin. This Bitcoin can be used to buy goods and services. You can pay for goods and services with Bitcoin. There are some quite high-profile cases of people selling their houses for Bitcoin, paying for accountancy services in Bitcoin. So it is readily used as a currency for payment. Or you could just hold it as a long-term investment. And many people have made a significant amount of money from buying Bitcoin when it's virtually unknown and sitting back and watching it go up until the values of today. I mean, fair to say that, say 3 or 4 weeks ago, it was significantly more than that. It has taken a bit of a hit recently. Now, many are using Bitcoin to buy other cryptocurrencies. So those that truly believe in it, they believe also in other cryptocurrencies. And they are putting or realising Bitcoin and buying other cryptocurrencies. So how do I acquire Bitcoin? Well, there's two groups of people really. There's the Bitcoin miners, which I would very much doubt we would come across. But Bitcoin miners, they are very clever mathematicians and they are trying to crack very complex mathematical codes. And if they crack a code, they are rewarded with 1 Bitcoin. That's how they come into existence. Now, what is far more likely for our client base is we have Bitcoin investors. They have bought via an online exchange, more than likely. There are Bitcoin ATMs, although I haven't seen them, but I understand there are Bitcoin ATMs. But I think online exchanges are more likely. So I've got a UK client and they've got Bitcoin. What is the UK tax treatment? Well, there's no specific legislation on cryptocurrency. HMRC believe the current legislation is sufficient to deal with the disposals of Bitcoin and similar. There was a brief back in March 14 which wasn't overly helpful. It just said assess on a case-by-case basis and it's probably liable to CGT. But you'd expect them to say that. We've got to look at the technical side of it and in our own mind determine whether Bitcoin is a chargeable gain, trading profit or just completely exempt. So is Bitcoin a commodity or a currency? Commodity has an intrinsic value, price is based on supply and demand, and Bitcoin is regarded as a commodity in the USA. Currency facilitates trade, and for me, Bitcoin is a currency. It should be treated as a currency in the EU, and it is. So for me, currency is what Bitcoin should be treated as in the UK for tax purposes. So we're treating Bitcoin as a currency. So foreign currency gains, are they chargeable? Well, yes, generally they are. Foreign currency, chargeable assets, gains and losses on exchange for sterling. But there are a couple of exemptions. You don't pay tax or you don't report gains if you acquire the foreign currency for personal use outside the UK. So, for example, if you bought some dollars because you were wanting to buy an American house, for argument's sake, and it transpires that in the end the house just didn't come off, so you converted the currency back and you made a bit of a gain on it, that shouldn't be reportable because it was acquired for personal use outside the UK. Now that's if it's just normal currency. I think it would be extremely difficult to prove that for Bitcoin, that you've acquired Bitcoin for personal use outside the UK. If you can prove it, fair enough. But I think it's extremely difficult to prove that on Bitcoin. Now, the other exemption is on foreign currency bank accounts. So an asset for CGT, conversion to sterling gives gains and losses. But because the complexities in lots of people owning foreign currency bank accounts and exchange rates changing all the time, they've been exempt from CGT since April 2012. So foreign currency accounts are exempt. But for me, an online wallet is not a bank account. So therefore, exemption should not apply to Bitcoin. So I don't think Bitcoin falls within any of the two exemptions for currency. I don't think you're going to have the overseas use point, and I think you'll struggle to get the foreign currency bank account because it's not a bank account. Now, if we look back to HMRC brief in March 14, they commented in this brief that highly speculative transactions are not taxable. It's effectively gambling. Now, what is the dividing line between speculation and investment? Are investors in Bitcoin effectively gambling? Now, you might fancy their argument, but for me, it's not going to work. It is not like putting money on the US Masters. It's not like putting money on a horse. So it's different. And because of the sophistication with Bitcoin, if you said to a man on the street to go and buy some Bitcoin, they would struggle with that. But if you said go and put a bet on, they'd be fine with that. So I don't think Bitcoin can be regarded as gambling. It is quite different. You might fancy it and try and see, but I think you'll come a cropper on that. So for me, Bitcoin is not the same as gambling. Let's consider the two types of clients. First up, Bitcoin miners, and then the people that have just bought Bitcoin. Now, Bitcoin miners, I think their profits will be trading. They've got profit motive, frequent transactions, nature of assets, etc. They should be liable, if they're in the UK, to income tax and national insurance. And expenses they incur should be deductible in relation to that mining process. And they should disclose their trading profit via their self-assessment return. But that is the minority. There won't be many Bitcoin miners on our client base, if any. But what about the people that just buy Bitcoin? Are regular and systematic Bitcoin profits evidence of trading? No, I don't think so. I think we've got case law on our side. Salt and Chamberlain, for example. Share trading by private individuals is an investment, not a trade. And I think it'd be very unlikely that Bitcoin is regarded as trading for non-miners. So I think it's very much a capital asset. It's not a trading asset. So for me, Bitcoins are chargeable assets. Any gains that you make on Bitcoin are chargeable to capital gains tax. That's proceeds, less base cost, and then pay your CGT at 10 and or 20%, depending on your marginal rate. If you happen to make a loss on Bitcoin, and I'm sure there's a few of those around at the moment, given it's dropped quite a bit over the last few weeks, then you'll have CGT losses, and they can be set against CGT gains. So I don't think the capital gains exemptions apply to Bitcoin. I think Bitcoins are fully chargeable. Now, because of that, I think we just need to raise that question on our 6th of April letters. If we're sending out April letters asking for information of income and gains, etc., I think we should have a specific cryptocurrency question. Because we don't know if our clients have bought some Bitcoin, sold some Bitcoin, or similar. So if we ask the question, then we'll find out. and then we'll have to report that gain. Now, they might not feel they've made a gain, because they might have sold it and bought other cryptocurrency. If that's what they've done, they've still got a gain to report. Now, in some cases, the gain might be significant. And if it's missed, then that is a significant error, and there will be a penalty on that miss. So I think we've got to raise that question on our April letters. And most of the clients are going to come back and just say, I wish I had Bitcoin. But there'll be a few that come back and say, well, yes, I have got some Bitcoin. I didn't think it was chargeable. So what are you saying? And then we need to explain to them that, in our opinion, Bitcoin is a chargeable asset for CGT purposes, and the exemptions that apply to currencies would not apply to the cryptocurrencies, in our opinion. So that concludes the lecture on Bitcoin and the UK treatment of it. My name's Dean Wootten. Thank you for listening.